Good morning, everyone. Morning, YouTube. Morning, traders. Hope everyone's doing well. Yesterday, I was traveling throughout the time where we had the morning update. So, unfortunately, I apologize. I couldn't do it yesterday. Was on a flight, so I missed pretty much the entire morning trading session and took a jab at it pre-market. But we have a few things to talk about. We have the GDP numbers. We have the PCE numbers that came out this morning, and a lot of inflation-based data that we should take a look at, considering what the next market move might be, how the market has reacted to the PCE, what the PCE number is, and where we could be headed in the next potential move, right? So a decent bit to talk about here. We're going to talk about what the levels and ideas are for Friday to kind of close out this week. But first and foremost, inflation, right? Major economic reports that turned surprisingly strong numbers last week with January retail sales and CPI prints. They both beat economists' expectations and estimates overall, but personal consumption expenditures that were released this morning at 8:30, they actually are the Fed's preferred inflation gauge, and they were expected year over year 5% for the PCE figure. The core number was expected at 4.3% year over year, and the actual numbers that we got were 5 point sorry, I'm going to lie to you. I think it was 5.4% year over year, so a hotter number, and 4.7, so a hotter number on the core numbers. So those aspects of personal consumption expenditures, that Federal Reserve's main gauge of inflation, were hotter prints than expected. So I'm just going to go over and take a look at these numbers a little more thoroughly here, right? Because I don't have them in front of me just now. So we got to take a look at these numbers. We're going to see them right about now. So the year over year PCE print for the prior was 5%, the expected was 5%. We got a 5.4%, so an increase on that. We also got the core number. Prior was 4.4%, the expected was 4.3, and the number that came out was 4.7%, right? The core month over month, prior is 0.3, expected 0.4, actual 0.6. Now the prior PCE, right, month over month 0.1%, the expected 0.5, the actual 0.6. So hotter prints everywhere we saw hotter prints overall. And with Fed's Mester did speak this morning. We did see a drop down in the overall market, right? We had Bullard that talk this morning as well. So Fed speakers mixed with this PCE data led to some decline in the overall market conditions. So in terms of a snapshot, we saw an expected rise, right? But they weren't expecting this much of a hotter print, which puts more pressure on the hike cycle from the Fed. We only got about a 5% increase for the chance of a 50 basis point hike coming into March. So interesting enough, right? Naturally, the higher number isn't going to be good for equities because that does imply a higher print. A higher percentage of a hike, and we saw barely change of a into the 50 basis point hike region. There's still a pretty high chance that we see a 25 basis point hike coming into March, even based off this data. So we're going to see what's going on. But why does the Fed care or like the PC compared to the headline number grabbing consumer price index, which is based on a survey of consumers' personal consumption expenditures, is based on a poll of businesses. So the CPI data, in contrast, tends to be subject to fewer broad-based revisions, while the PCE accounts for the substitution effect. So this is why the Fed kind of looks at this a little more, because you get a grander scheme of what is going on in terms of inflation. So yesterday, right? So we had sorry, I'm just reading this other headline. Yesterday we had another print, which was the prelim GDP number. So I'm just like jumbling, there's a lot in my mind. A lot to consider here in terms of the Fed's next action. The economy's next action is going to be based on GDP and inflation, right? Can the labor market handle it? Can the overall economy handle it? And is inflation going down, right? These are going to be the things that encompass, do we get a soft landing versus a not so soft landing? So the probability of a not so soft kind of medium landing, if you will, is the highest of probabilities. Still, there was some increase of a softer landing in the last rally that we saw, but that's slowly going down with these hotter inflation prints. And The prelim GDP, of course, is not the actual GDP number, but the prelim GDP came out lower than expected, which is putting some downside pressure in the market as well. So yesterday we got a pretty big drop in the morning session. Then in the afternoon we picked up pretty much till the close. And right now markets are dumping a little more aggressively. So here pre-market based on that data. So what does this mean for us, right? Where can we go from this? If we take a look at the market on a broader sense, just for a minute here, so we understand what exactly is going on a broader sense, we have broken to the upside, right? We have started to change the structure, especially on the futures side of things. But what is happening right now is we're pulling back into a key region on the SPY, SPX, whatever you want to call it. We're pulling back into a key region where we can find ourselves. Give me a minute here as these things load. Where we can find ourselves in towards the 393, 391 region on the overall SPY, which comes into low 3900s on the ES futures, 3910, which is a massive, massive area, the 3910. So if we come into that area and prices actually rebound, that's going to be the expected move for the next rally and the continuation of this upside move, right? This upside trend. But should we break, realistic, we're probably going to be hunting those lows that came out at the end of last year in December before this rally and potentially even further. So that's going to be a do or die area that we could probably see in the coming days, if not today, maybe next week. We're going to see how prices react from that area. But that's going to be a region that a lot of people are watching, right? You have a decent upside in tech. You have a decent earnings report from Nvidia. So semis are strong, which has to do with the strength in the overall economy as well. But we're watching things like IWM, for example. IWM is overall strong. That's the Russell. But right now we are below a key pivot. If this drags on further to the downside, we can probably break that level and target the 380s. It's very difficult to see right now what the next move is. So everyone has to focus on that small area that I just outlined, especially on the futures, right? The 3910 region. If we focus on that, if price should come into that area, because right now we're playing with the 60-50 area. If this area breaks, the 3910 is pretty much priced in. And that's what my perspective is. And we'll see how prices react in and towards those areas. So currently, as it stands for levels for today, things that you need to watch out for is going to be the low 60, right? 61 to 63 on the S&P 100 futures. That's going to be a key region where the longs are going to attempt. There's a massive region at the 74, which we bounced off of yesterday, and that's going to be an attempted short area. If the sellers manage to push it off of that 74, which is going to be early on in the morning, we're going to see a probably stronger downside into the 50 region. Above the 74s, I think we do have a chance in towards that 90. I was looking at the 410 as the pivot today, but I'm going to have to revise that into the 74s. Honestly, the 74 is a good pivot because it's a low of a key distribution that we held out yesterday. So that's an area I'm going to watch. It's pretty hard to be bullish now that we're below the 410s and even below the 3990s. But obviously, we've had a lot of downside here pre-market based on inflation print, and I wouldn't be necessarily surprised to see some kind of a buy stop run before maybe we get some of this downside movement. So those are going to be the areas that I'm going to be watching today very closely. I want to see what happens at that 74 and then probably back at that 90. That's what I'm going to try to look at this morning and see if some of that downside press comes in, because we are at a key pivotal low. I'm expecting these guys to attempt to at least hold it to start the day off, but obviously we're below a lot of key regimes where downside pressure is going to last. Overall, we're in a very bearish area, which I've been saying pretty much every day this week, because that's how things kind of stumbled. So that's pretty much what I'm looking at. That's all I have to say. I hope everyone has an amazing weekend. Enjoyed this, had an amazing week, and we'll be back at it on Monday. I hope that everyone's ready for the new futures course that's coming out. More on that next week and even maybe on Monday. So keep an eye out on that. And check us out at community.tradeproacademy.com. We'll see you guys there. So thank you all. Have a great weekend, and we'll chat soon.